Ira Epstein of Linn Associates with your morning flash update for this Tuesday, the 3rd of December, 2019 at 9:25 a.m. Central Time. Well, big down in the stock market. It sort of fits in with getting a break before a Santa Claus rally. Let me tell you what's going on. The president is now, again, said maybe no phase one deal with China. They want it. He doesn't know if he wants it. You do know when you get to a negotiation, I've mentioned this over and over, it's that last step that is the hardest to cross. So here we are, roughly 2 weeks ahead of the December 15 timeframe where more tariffs will go on. The president instituted tariffs on steel and aluminum out of South America and some countries yesterday. France and the U.S. are going at each other right now with ladies' handbags, maybe going 100% tariffs, cheese and wines. So there are battles galore, and the tariff man, as President Trump is known, is using the weapon available to him, weighing on the market. You add to that the psychology. Today there'll be a vote in the impeachment inquiry to see if they have the votes to move on and get the impeachment moving to the judicial side. The president so far has said he will not send anyone there, in other words, representing him, to the judicial side, but that can change if they get a list of witnesses and other demands. In the energy market, you see all these storms going through the U.S. You're getting an Arctic blast next. So the market is lifting there. Obviously, the reference to world trade even getting worse hit if the U.S. puts on another round of tariffs, weighing on markets like the energies. A big move up into the bond market and the notes off of this as the president's making it clear that he's sticking with his game plan. Did we get down in that 373 area in the March corn to something of a harvest low? Hard to know on that. The dollar not responding very much one way or the other to what's going on in trade, but it broke hard yesterday, and that put the pressure on the market. And in the metal markets, they are popping to the upside, finally coming to life. Now, if you haven't seen my gold report, I highly recommend you go to our website at www.iraepstein.com under the word research. It only stays up 5 days. It's going to come off possibly today. So you might want to get there and take a look to what I was saying. A lot of this is all starting to fit in with what I had made the report. Remember, those are video reports. When we take a look at today's data, I don't know that it all matters that much, but the ISM data is a big, nice kick. 50.4 versus last month's 47.7. Now, retail sales, Red Book sales, got to remember the different time frames that we now have for Christmas, shortened 6 days and so on. But the U.S. retail sales were up only 0.4 the first 4 weeks of November. They were up 5.3 for the first 4 weeks of November versus last year, and the retail sales were up nearly 8% for the week ended November 30th a year ago. Then we get to the uglier info. The ICSC came out and said retail sales were down 5.9% from the previous week. Again, I'm going to remind you, the holidays fall at a different time this year. We saw that Cyber Monday, pretty big numbers. We're wondering how this is all going to kick out. Retail sales were up 2% last week from a year ago. The Reserve Bank of Australia, to no one's surprise, kept its interest rate steady. Remember, they're sitting at about 0.75%, but they are leaning in their vernacular towards easing. The IMF today issued a report, and it said that Iran is in the deepest economic downfall in the last 30 years, and that the country will likely face a payment crisis. Eurozone's PPI came out and rose 0.1% month over month. That's totally in line with expectations. PPI in October was down 1.9% from October 2018. Also, that was 1/10 below the expectations for a 1.8% fall. Given the break in the stock market, I highly recommend that if you're looking to use this break in stock indices, one of the things that I've been working with and doing are putting out recommendations and sometimes using these micro indices. We did it in our last round of trades just recently, both in the S&P and the Dow, and I'm glad I did. It allowed me to stay in and catch some of the move. Not that I'm always going to catch it. I can be just as wrong, so understand that. But catch means putting on a trade that I was comfortable enough to put out to the clients and not worry about the crazy swings. These trade 1/10 the size of a normal contract. The commission, dirt cheap, dirt cheap. The exchange fees, dirt cheap. Margins, maintenance, dirt cheap, okay? Everything comes into difference. And the idea here is they're also fungible. So if you're a self-directed trader, we charge $1 a side plus exchange and NFA fees to make the trade in that. Not a bad way to get going. If you'd like more information, either call our staff. You can also go to our website at www.iraepstein.com, but add this at the end of it, /micro. That's how you get to that page, and it explains all the information about this. I'm Ira Epstein. You have a good day, and I will see you all later this afternoon with our end of the day videos. Take care.